Now we have an exciting week ahead in the run-up to the Budget 2010 announcement by Prime Minister Datuk Sri Najib Razak. And as expected, major sector players are gearing up to be surprised or disappointed, and the market's anticipation can already be felt. Also, two movements on the world markets are making their presence felt in our own. And who better to help us make sense of all these developments than Maybank Investment Bank's Head of Retail Research and Equity Markets, Cheng Hooi. Welcome, Cheng Hooi.
Hi.
Always good to have you on the show with us.
Thank you.
Okay, let's take a look at what happened in the world markets first. A mixed bag of results last week, and we saw the Dow Jones Industrial Average rise above 10,000 points and then close just under 10,000. Now, what does that say about the American market last week?
Well, still stilted economic recovery. We had good figures for JP Morgan and Intel, but Bank of America and GE were reporting bad figures at the weekend. For GE itself, there was a 20% drop in revenue, and Bank of America actually posted a 1 billion loss. So actually both struggled with very still meager business and consumer spending. With 9.8% unemployed in the USA, what happens is I think people are still not spending. The US consumer is basically deleveraging, paying down housing debt, paying down car debts, credit card debts, and I don't think they have that extra money to spend and get the US economy going. As it is, the US consumer makes up about 70% of their GDP spending. So when they're unemployed, that's just literally not very much consumer spending there.
Now, I mean, we've seen results over the last 3 quarters, over the last 2 quarters in Malaysia doing better.
Yes.
As each quarter goes by. But it looks like in America, things haven't really started picking up yet.
Yes, indeed. But I think there's a disconnect with stock market as well as the economy. So what happens is the economy actually is perhaps just rebounding back and perhaps doing some sort of a W, whereas the stock market has done literally a V-shaped sort of recovery. This is based on liquidity, and I think it's anticipation of better results. Results that are less bad that has caused the stock market to spike up like that towards the 10,000 mark last week.
So how do you expect the Dow Jones will be doing in the week ahead? Well,
we shot above the 10,000, and because of the bad Bank of America figures, etc., just saw the market closing at 9,995. In our latest research report, we believe that the market will go above 10,000 again to about 10,334, which is the 50% retracement area, and a little bit higher, about 10,550. So basically, it's still buoyant and on that rebounding mode still.
Of course, traditionally, there's always been some sort of correlation between the KLCI and what happens in the American markets. How do you think that will affect the Malaysian markets in the week ahead?
I don't think Malaysian market will be affected adversely. In fact, anything to the downside, our market will be very well contained because I believe the local funds are not selling in a big way, and maybe just the smaller players are selling. And when the markets go up in the States, we don't move up as a similar or corresponding movement. I mean, for example, if the Dow moves up 2.5%, we don't move up 2.5%. Perhaps we move up 1.5%. So, I mean, it's very cautious to the downside in the sense of it doesn't sort of fall off that much, neither it does rise that much, percentage-wise.
Okay. We'll come back to the KLCI in just a little bit, but let's move on to the ringgit now. We saw that strengthen over the last 2 weeks from 3 ringgit 48 to about 334, only to settle around 338 over the weekend. Now, what's going on there?
We believe there's actually presence of foreign hedge funds in the region, and because the dollar is actually having a very, very low interest rate yield now, we propose that I think there is a dollar carry trade program amongst these foreign hedge funds. The dollar carry trade is basically due to funds chasing the highest return. They basically borrow in dollars, which technically is very low to them to borrow in. They have collateral, they borrow in dollars, and then perhaps if the Australia currency is having like 3% interest rate, so there's immediate interest rate gain there. And of course, they will go into Australia assets. Now that the dollar is down, the commodities are rebounding, and Australia being a commodity producing nation, that's the cue for them to hop onto the Australia dollar. And if you notice that on the cross currency, the Australia dollar has actually gone another up cycle against the yen, which is also another low interest rate currency. The yen has always been in a low interest rate environment since the property stock market and asset bubble crash 20 years ago, since 1989. So technically, the hedge funds are in, to make a fast buck. Yeah. So what happens is the ringgit and the Southeast Asian currencies have actually gained over the last 2 weeks. I believe central banks in the region have intervened to stem the rise of the local currencies against the dollar. But I think this hot money that comes in will also go into stock market, which translates to the KLCI closing at 1256.77 on last Friday.
Okay.
So it's basically, quite bullish for stock market, temporarily though.
Coming back to the stock market, the last time you joined us on the show, you shared that your critical retracement area for the FBM KLCI was 1284.34.
1248, sorry.
Since then, the market has broken above that. So what's your outlook on the market right now?
Sorry, my critical retracement was 1248.34.
1248, my
Yes.
apologies.
Okay, and the market has actually broken above that level because of the foreign hedge fund money.
Okay.
And we're actually looking at a higher target now, about 1288 and 1305. This being once a retracement or resistance level is broken, we have to look higher. You cannot look foolish and call the bears coming when the market's really going up. The 1305 high is actually synonymous with what our head of research, Andrew Lee, has put out in his latest note. He's looking at a 1305 target now, and 1288 is an intermediate chart target in between. 1305 is an interesting point in the graph. It is the high when the foreign funds actually exited last time. The foreign funds exited after the March 2008 general election, when the market plunged on the intraday to 1157.47. And in late April, the market rebounded into April 2008, a high of 1305.09. So we're actually looking at the same level as Andrew.
Wow.
On our chart side. So we come from different, avenues of, how to work out the market's target, but still actually,
eventually you meet in the middle.
We meet in the middle.
Okay. We're just going to go for a short break, Cheng Hooi, and we'll be back right after this. Please do send any questions you may have for Cheng Hooi to stockwatch@tv3.com.my. We'll be back right after this.